Good evening and a warm welcome also from my side. I will be hosting a roundtable. And I would first like to start by introducing the participants. We have taking part in the roundtable Teodora Petkova, CEO Untitled from Bulgaria and also VU Executive Alumna, Christiane Flehberger, Head of Institutional Clients, Raiffeisen Capital Management. We have Robert Ulm, CEO Hello Bank, Sandra Straka, Executive Director, Goldman Sachs Bank Europe. We have Markus Arnold, Managing Director from Arnold Immobilien, and also Elisabeth Müller, Country Manager, Austria ESG Plus. I would like to open the discussion with a very relevant topic. Obviously, the dramatic corona crisis shook up global financial markets badly. And in this context, what were maybe perhaps some of the major lessons or also conclusions, if you like, from the crash in your sector? What did you witness? And perhaps I would like to first address the question to Teodora as a banking CEO with perhaps a very good overview of the entire banking sector. Please, maybe if I may have, if I may start with you, if that's okay.
Good afternoon, everybody, and thanks for the invitation. Happy to be part of the event and of the roundtable. Directly to the answer of the question, you're perfectly right. All the industries were badly hit, and the banking industry didn't make a difference. So on the contrary, we are a cyclical industry, usually moved ups and down with the ups and downs of our customers. So from this perspective, we encountered already significant impact of the COVID. Firstly, saying that the banks, of course, when there is uncertainty and crisis, the banks adjust their risk appetite. But also our customers adjusted their risk appetite and they started avoiding consumer loans, mortgages, as well as all our corporate customers have reconsidered their investment plans. Also, whatever was on banking books is already quite inflated with additional extra risk. So the banks have already embarked significant portion of risk. And for sure in the future, we will see a relatively high share of customers that will be facing difficulties in keeping to their normal repayment terms. And also, last but not least, these extra credit risks that we're facing comes without a respective adjustment of the interest rates. And I'm not complaining about that, simply giving you an overview of how the banking system looks like. At the same time, for a banking system, this crisis also was a big acceleration to transformation and to changes and to shift of the customer behavior towards omni-channels and digital. This was very much incentivized by the banks, but also our customers because of changing preferences, because of also feeling the usefulness and the friendliness of the digital channels, and also the fact that they are now more safe. And provide better health protection. So there is a big shift towards these channels. This is about the industry and about the lessons. Allow me quickly to quote 3 corporate lessons and 3 personal ones, if I'm allowed. For the corporate lessons, first lesson is that crisis comes unexpectedly, but crisis can be managed. And no matter how organizations are prepared for crisis, as well as but all the other industries, every crisis has its huge challenges, and you're never prepared for that. But at the same time, it's very important that you know how to tackle and how to approach every new crisis. And the rules are very simple, and they're start with a very critical assessment of your starting point. Second is really to be able to control and to report only the meaningful stuff. Because in crisis, banks, but I believe all the other organizations, start to be obsessed by reporting. And they see that they think that the more data you have and you process and you report, the better you manage crisis. It's a big mistake. So it's very important that the organizations really focus on what is meaningful for this very crisis. Third very important thing when we speak about managing crisis, it is really to be able to do the zoom in and zoom out approach. I mean, to be able to see the big picture, but at the same time to be able really quickly to focus on the small details, because every crisis comes with its peculiar, specific small details, and they are like the divas. one of the last things here is really to mention that speed of decision comes much ahead of taking the right decision. So it's speed instead of perfectionism of taking decision. And last thing here, when managing crisis, it's really to constantly remain in contact and to engage your employees. Second corporate lesson, and it's a nice cliche, but I'm going to say it knowing that it's a cliche, but I know that it's very much relevant for our industry now. This is that the crisis is opportunity. I mentioned already the digitalization, and digitalization for banking business was the buzzword that we have been using for years. But this crisis for us made a huge difference. But I also believe globally, because now we understood that banking models have to be changed, infrastructure completely changed, and banks really have to enhance the digital offering of all their banking services. Actually here, McKinsey recently published one survey about the speed COVID has accelerated the digitalization globally of all industries. And what they have concluded is actually that out of COVID, 8 weeks was done so much digitalization that would have taken all the industries 5 years to accomplish without COVID.
That's really interesting. May I actually pick up on that point, digitalization that you made? It's a really good point. And I think it's obviously some models actually are living off obviously 100% of digitalization. Perhaps if I may cross over at this point, at this very good point that you made with digitalization, to Robert, who is a CEO of an online bank. I think what I was also reading is that during the COVID lockdown now, there was a huge increase in online usage. Is this a one-time situation which might end after COVID crisis ends completely, or do you think this is just increased the speed of a trend, like also Teodora mentioned with the increasing digitalization?
I mean, as an online bank, our customers are more online than not. This is the first point, which is quite interesting. And if you're going on online brokerage, this is a top on. But digitalization is key, and I think the crisis showed that we really, and not only we, I mean, the whole industry accelerated in digitalization. So we made things that we never thought that we can do it in this short manner of time. So, but what we saw and what was really interesting is that coming back a little bit to the market, what Christoph said as well, is that the market was delivering something. So the market was delivering something for traders, which is volatility, and was delivering something for investors, which is lower prices. And we have to keep in mind that we had more than 10 years of increasing prices on the stock markets. On the digitalization, yes, we saw a lot of people coming in. We had a significant increase in new customers opened an investment or trading account due to a 100% digital onboarding process. And that's for three main reasons. The one is they really wanted to benefit from the volatility in the market or from the lower prices. Second, they had the time to reflect and to think over where do I want to have my saving plans, where do I have where do I want to trade my shares. And they started and they had the time to compare the competitors here, and we see a lot of customers coming to us from classical banks.
Do you think? Are you afraid this might slow down again, this trend? Do you think this is just due to Corona because people were not able to go out to their banks like they were used to?
This pushed digitalization, and this pushed usage of digitalization tools. But the trend is still here, and I think this trend will not go down so far because customers have learned, they were pushed to use digital tools. And then they learned and they saw, okay, it's fine, so I can use it, so I will keep it. And what we saw, what was quite interesting for us is that, and there I'm coming back again to the other speakers, what we think here at Hello Bank, and we are 25 years on the market, so we are really proud of that, education is key. So we provide our customers, and not only our customers as well, people who are just interested in investment and trading, the whole range of education programs, more than 100 videos in our new trading license, just to get the information to the people, to show them it's not a rocket science to invest. Try it slowly. You have two eyes, one for the profit and one for the risk. And there we had a huge increase in our webinars on the participants. But finally, we believe that you are the best advisor when it comes to your financial future. And you have to choose what you want to trade, where you want to invest. And it's all about education, as I already said. And at the end of the day, education, you're learning about products, you're learning about instruments, you're learning about strategy. But the whole thing, please believe me, I traded a lot, and I won a lot of money and I lost a lot of money, to be honest. So psychological things are key in the market.
Perhaps that's actually a good point also to lead over now to two experts who are right in the fund business, in the midst of fund business. One of them, Christiane. Perhaps you also have some insights from your viewpoint of the business that you're in the fund business. What were perhaps some of the lessons or conclusions that you found to be very important from this dramatic crisis?
Yeah, good evening also from my side. Thank you very much for the invitation. Yeah, you're completely right. The Corona crisis caused one of the fastest decreases in capital markets in history. All asset classes suffered, but nevertheless, we also have been able to draw our conclusions. First, we have also seen how important it is to have a digital setup. Within 2 days, almost all employees of Raiffeisen Capital Management were able to work remotely. And so we had the opportunity to inform all our customers very quickly about capital market developments and the impact on their investment.
And did you also feel that people were actually eager to gain more information than ever during the crisis?
Yes, of course. But in this crisis, it was very good that our investors kept their nerves. So we informed them on a very regular basis and they trusted in their investments.
So you think that a good information basis was also key for your investors to keep more calm?
Yes, of course. And the digitalization helped us in this case, of course. So we were very quick and we had a good digital setup at home, and yes, of course.
Information is key. And maybe also Sandra, if we may also have your insights on from Goldman Sachs, how did you perhaps also witness or what were some lessons or conclusions that you might want to share with our audience?
Thanks, Raria, for questions. So the more volatility we saw in the markets, definitely the more information was needed out there with market participants. I think what is the worst out there for investors is uncertainty. And when we think of the word crisis in Chinese, there are two graphical symbols who describe this word. The one stands for danger or distress in the market, and the other one is for opportunity. And I think it always lies with us how and from which angle we see the market. So when I think of the January, when we stepped into the market in 2020, we were there after the longest bull cycle in the markets after 10 years. And our investors were asking the question how long this good journey could last, although no one, of course, expected this pandemic to happen. And what we saw...
Some markets were at a record high actually in January, if you take the US stock market. So people, like you said, wondering it's a good time or not a good time, but nobody obviously could foresee the crisis.
Yeah, and I think many of them were neutral in their equity positioning, especially institutional investors,
Can you
because
quickly
they were
explain neutral for the audience? Can you quickly explain neutral for the audience? What you mean by that?
Yeah, so they balance the risk between equity and fixed income positioning, not being too strong on invested on the equity front, because they already feared that the prices are too high in the market given for this very long good horizon. So as mentioned, we had over 10 years of positive equity markets, and everyone was seeing the markets somehow coming to the end, as mentioned, not expecting, of course, this pandemic to happen. And what we saw over the last couple of weeks with all the lockdowns was, of course, very dramatic. We see especially small and medium enterprises very hard hit in the market. So there are some surveys.
Their stock prices, you mean, right? They were hit particularly hard.
Yeah. Mm-hmm. So if you have certain surveys out there in the market with those smaller enterprises, many of them fear that a lockdown of 3 months could make them fail due to lack of liquidity. But fortunately, all the global central banks out there did a lot to help with liquidity in the market. Otherwise, we believe the outcome would have been much more worse. Mm. And if I may just finalize, what did we learn out of this crisis, but I would also say of every other crisis, is to be as diverse as possible in your investments, because you don't know where the markets are heading to, and maybe to not just see the danger out there, but also see a crisis as a chance for future upticks in the market, and prices will go up again.
Central bank and liquidity is also a very good keyword, because a lot of the money that has been flowing into the markets has also been invested in real estate. And perhaps Markus might want to jump in at this point for real estate, and also sort of lessons and conclusions from the Corona crisis.
Thank you. That is the perfect timing. Thank you. For me, it's hard in this round, because everybody is talking about digitalization, about stock markets, about financial markets. I represent a total different field, that is the brick. Yeah. Big advantage of the brick is that it's not just paper and bits and bytes. Somebody can touch it, and that is our big advantage right now. Everybody who has had crises before, and we had the dot-com crisis, we had the bank crisis, the Lehman crisis in 2009. The markets were always the same, or for us the same. People were afraid of their money, and they were changing money into bricks. And this is what we experience right now. I think the markets have never been better for the real estate business. Basically, everybody is trying to get the money from the accounts into real estate. And this is something that is sustainable and easily explainable for most of the people. Everybody needs to live. I mean, we've all been sitting in our apartments. I think no time ever in the last 30 years, or at least that I can think of, my apartment was more important to me than in the last 5 months. And I think this gives a very good emotional perspective to real estate. This is what people right now are thinking of. This is what everybody who has the possibility to invest in real estate as a real argument.
If I may jump in at this point,
of course.
There's been also warnings of an asset price bubble developing in the housing sector. Even the Austrian National Bank has mentioned that housing prices have increased tremendously, as also in Austria. How can you be certain that this is not going to be the next field that crashes?
First of all, the Austrian National Bank is telling this since 10 years, and nothing has happened so far. I would say very easily explained. All the money that was invested into real estate in the last 10 years, let's say 80% of the money, comes from private funds, family offices, inheritages, no, Erben, you know,
inheritance.
Inheritances, money that was already there. Very few money was taken to pay back loans. The majority of the market was held up by people who already had money. So if you don't have a high financing level in the market, you don't have to fear for a bubble. And compared to all other cities we are in, we are having offices in 7 cities in Europe. Austria is the most cheap, so Vienna is the most cheap market you can think of compared to the income of people in the country. So basically, we don't see this bubble.
Okay. Thank you very much also then for your statement. And with this, I would also like to go to Elisabeth.
Excuse me, I have one interesting question. Are prices going down as right now people may have less money available for immo?
We are not seeing it. Actually, the prices have been stable from before Corona and after Corona. What we hear from many of the developers is that they are able to sell their apartments basically from the plans. There is not even the seller in construction yet, and they are already selling the apartments of the project. And with this setup, there is no price falling.
Thank you very much.
Thank you. And yes, with this, I'd like to go over to Elisabeth from the country manager ESG Plus. ESG, obviously for environmental, sustainable, and governance, which are the 3 key letters within the sustainability investment field. Please, Elisabeth, if you would also like to give us your insights on lessons, conclusions from the crisis, whereas sustainability obviously is a rather young or younger area compared to the others, but a fast-growing area.
Thank you very much for the question, and I would like to tackle the question from a market's perspective and then from a private investor's perspective, which might be also interesting for the audience here. So basically, we were not surprised to see still a surge in demand for sustainable investment products, even during the COVID-19 pandemic. And ESG Plus basically is a specialized company specialized in sustainable finance solutions. We work with banks, insurance firms, and institutional investors. And here, as you mentioned, we transform lending and investment portfolios in line with social, economic, and good governance criteria, the ESG criteria. And why the demand is so high in the financial market is as a result of the EU sustainable finance legislation, which will be enforced next year, defining what sustainable investment products actually mean and are.
On an EU level, right? I think on an EU-wide level, not just in Austria.
Exactly. Exactly.
And can you maybe mention what the advantages of having one basis as a common basis for sustainability? Because I think up to now there was a lot of uncertainty what sustainable really is.
Exactly. So, well, the objective basically is to meet the climate goals under the Paris Agreement and to transition our economic system towards a low emission economy. So this is basically why the EU Commission has started this process. But as you mentioned, there are also clear advantages for private investors, because before you could label an investment product, a fund, for example, as a sustainable or green fund, but there were no systemic criteria that were applied to that specific fund, and there was no common definition of what sustainable actually mean. And what we have seen in the Austrian fund market, because we're specialized here, is that the fund market is still some sort of black box system where private investors that wish to invest sustainably do not know which companies or projects they support and their money is going to when buying a fund. So this is why the EU taxonomy or EU sustainable finance legislation is very helpful to make clear definition of what is green and what is a not green investment. But there is a clear lack on social dimension. And what we have seen during the Corona crisis that also private investors wish to invest in a social dimension, for example, healthcare or education. So I heard the Q at the beginning, or also sound labor conditions of companies that are invested within a fund. And this is why we have created a platform that is called SHEinvest.org, which you can visit, and we screen all funds that are available in Austria, conventional or sustainable funds, according to 9 sustainability criteria. And private investors really can take on that platform that is completely free of charge to educate themselves and to filter our sustainability criteria and align their investment decisions with their core value system.
Thank you very much for that. I would now like to go on to question 2, which will is a bit more in depth and sort of is supposed to be a sort of a giveaway. What kind of hands-on what to do? How would a broadly diversified portfolio help in these kind of times, or how has it shown how important it is? And perhaps I would like to go back first to the fund experts. Christiane, perhaps if I may start with you on this point. How important is market timing, broad diversification? Perhaps if you would like to go into that point.
Yes, thank you, of course. Diversification is always a very important issue when it comes to capital market investments, both in terms of the timing and the location of the portfolio itself. What we saw, especially in early March, at the beginning of the global spread of the crisis, was that all asset classes suffered at the same time. But
so even bonds that were supposedly safe, sort of turned out to drop in value. Is that true?
All asset classes suffered during the crisis, but definitely not at the same extent. So in such an environment, it is hard to achieve a positive contribution through diversification. Regarding the timing, it is also important to use step-by-step investments, like Mr. Boschan mentioned before. Investors are often chasing the right or best moment to invest, and it helps and makes sense to invest in several stages via regular or monthly saving plans. And we have seen a clearly trend within at our customers, but not only at the retail sector, also our institutional customers started with step-by-step investments, definitely in a higher amount than a retail customer, but they are still use this timing diversification effect.
So could that also be the reason why the markets retraced so quickly? Because even big clients, as institutional clients who invest very large sums, started to say, well, this is a good point to start coming back in gradually, but not all at once.
Yes, you are right. They use definitely the opportunity. So as I think Mr. Boschan mentioned before, we have the perfect timing for starting a saving plan or to increase the investment. Yeah. And a lot of our institutional customers are using this opportunity.
So you shouldn't be afraid of a crash. It can also be a really good opportunity.
Yes, of course.
Mm-hmm. Okay, thank you very much. Sandra, perhaps if I may also ask you if how you, what might your input be to this point?
Yeah, I will come back to what Christiane said and what we heard from Mr. Boschan before. So diversification is key. There is the old saying, never put all your eggs into one basket. And I would also like to emphasize on what we heard before, that we would really focus on being broadly invested and not trying to time the market, because if investors try to not, if they want to avoid losses, they will also miss the gains, because if we have seen historical charts, most of the equities tended to have strong gains after a big drop in the market, and then it's hard to time that market really correctly. But what we also see with the crisis, that the behavior from clients changes a lot, and especially in the consumer space. So it's getting more into digitalization, it's going more into online. And
are you
all
talking
the
about investment themes, or what do you mean from consumer?
yeah, we see that as
so you mean
investment
stock companies that are sort of offering consumer goods are less in favor now, and digitalization companies are more in favor, so to speak, because it's
So we have a specific theme. We're looking at the last, let's say, 4 years, which is looking at the millennials generation. So everyone who is born between 1980 and 1999. This is for us the digital generation. It's important to us because it's a huge crowd out there, and the purchasing power of that generation is quite huge. And what you see there is that aspects like sustainability are quite important, and it's more of focusing on consumer experiences than maybe to owe something. So if we think of examples like car sharing, for example, is more common than usually. When we have been 18, everyone wanted to have a car and live his freedom. Now we see the trend more towards, like car sharing, and people needn't spend money on that, but spend money more on healthy food, focus more on companies which are not in the having plastics, for example, but having aluminium bottles out there.
So one can say that yes, long-term investing is important, but it's also important to sort of notice changes and to sort of adapt the portfolio to changes in the world, because at the end of the day, a stock price long-term should sort of reflect the economic activity. So obviously it would make sense to sort of try and adjust your portfolio to what is happening out in the real world at some point. Now, even though sometimes there's a disparity between the financial and the real world.
Yeah, but the funny thing is, I mean, usually for us in the first stage, it was this kind of millennial theme. But the crisis now showed that the trend is going to more of the generations out there, because all the online gaming, online food supply, online education is not just a millennial theme, but this is getting common for all the generations out there. So we believe that all those companies will really benefit out of that.
Well, thank you very much for that. Obviously, also it would be important to see how real estate investment can sort of help, or can be part of a broadly diversified portfolio. Markus, maybe if you want to give us some insights from your point of view to this.
Well, we have a very interesting statistic made a few years ago. That is, every family in Europe that kept their fortune over 500 years had 50% of their portfolio in real estate. Basically, that is your safe trip to maintain your fortune. I think diversity in investment you always have to have, and nobody knows what is the right percentage, and nobody knows what is the right investment. But I think that when it comes to crises, the real estates have proved that they are quite strong, and they don't fall back that easily as other asset classes. Yeah,
I think I think you still have to sort of even diversify with there, because from what I read is that
for sure.
Office,
Sorry.
For example, and hotel investments really suffered during the Corona crisis, while private use and private property was obviously well in demand.
I'm totally with you there. For me, for the audience that is watching right now, I think the only topic and the real topic is apartments, is living. Yeah, and everybody has to live at some point. Who would have thought that hotels would not be able to have any client, and who would have thought that the retail asset class is now under pressure by the online business that intense? Yeah, I think retail by now has lost 100 millions of clients, as somebody has mentioned before. People got used to use apps. Yeah, I mean, my parents are 75 and they are using apps suddenly, they wouldn't have even known what it is before the crisis. But this is not the asset class that we are talking right now, because we are talking about living, and this is the most secure asset class you can think of. And you're not getting rich with it once you buy it, yeah, but you stay rich. That is actually the the idea behind it.
Okay, thank you very much. With this, I would like to go on to women and investing. They are particularly interested, obviously, in sustainable investments. Crisis has spurred demand even further for sustainable investments. Maybe Teodora, if I may go over to you at this point, women and investments, how is this seen in your bank? And perhaps can you deliver some insights from your point of view to this?
Sure, I would happily do. You know, we don't differentiate our customers to female and male, and it's a principle that we follow. Actually, we tried once to do so, and we failed, because we discovered that generally women tend to avoid such female products. They would like to be treated equally with men. Do you hear me well? It's yeah, or there is a kind of interruption. But for us, what is important is that really women are more precocious investors, and they really tend to get to be more educated and to be more informed when they take investment decisions, which we highly respect and highly evaluate, because we do believe that the right investments are done in products and assets that we really understand. So information is key for making right investment decisions. So what we do is we try really to adapt our advices to the female preferences based on their risk appetite, based on their age, the tenor, the time frame that they have ahead of them, and generally based on their expectations. Some of them really tend to go more into impact financings, but I would like to stick more to BRICS. We have people that really would like to have in stock market investments, and we try professionally to support everybody, also using our network of leading partners, both in assets under management and bank assurance, and try to find the best solution for every woman, for every female, to get the maximum return out of their savings. It's usually, there is the right saving for everybody, and also for every time is the right time to start investing.
Thank you very much. Also from the other point of view, from the online banking, from Robert, perhaps is there something you can say? Obviously, with an online bank, you have a good insight maybe on some statistics on behavior, on women, on finance, and in particular sustainable investments.
I mean, we see a clear trend into sustainable finance, which is key for us in the product range we are offering there. And we see very clear that women are seeking more sustainable finance products than men do. So for women, it's not all about the money. So, you know, men and in my age, so we sold our souls more than one time on the market. So this is quite different for women. So they are not running blind into the market. They lose the right education. They're asking about risk. They're really caring about things who are impacting our business, how are impacting the environment, how are impacting the planet. So I mean, at the end of the day, this is like a scale. This is like a balance. So you have a little bit the men's on one side who are just running for money, and women say, look, okay, stop. There are a lot of things who are much more worth it than just running for money. And there we are going back to sustainable finance. And the other side is the change in the generation. So we saw and we heard about the millennials who are coming up and they are digital natives and so on. But what we see now when we're talking about Friday for Future movements, very young people, Generation Z, who will come into the next year into investing, and they know two things about pension, what it is, and they don't get one. So they have to care on their own, and then we come back to the saving plans, which is the best idea for young people now.
Okay, thank you. I think there's also some particular aspects though that have been spurred now during the crisis. which obviously with healthcare taking center stage, healthcare being a big issue at the moment, also fair governments in terms of how employees are being treated, or are they just being laid off during the crisis. Perhaps Christiane, I think you have some insights also to the social and governmental aspects.
Thank you very much. Yes, maybe I started with one major point. You asked for the sustainable funds during the crisis. And the much discussed development of sustainable investments was now able to undergo a reality check. And it was clearly shown that sustainable managed products are much more crisis-proof than traditional managed ones.
So that means that they dropped less during the crisis?
Yes. I can give you an example. When you compare the MSCI World Index, which is a global equity market index, with our global equity sustainable fund, you can see on a year-to-date basis an outperformance of 1.2%, which is in such market phases really a very good result. To come back to your question, I also want to mention women and sustainable investments, because I think this is really a very important point. And the reason why women are much more have a bigger interest in sustainable products is because they want to invest in products that are not exclusively aimed at financial returns. They also focus on companies and countries that act in a future-oriented and responsible manner in accordance with the ESG criteria. And the ESG criteria in a setup of fund management is an additional risk management feature. And that's what Robert, I think, said. Women are sometimes a little bit more risk averse than men.
So
which is good.
Yeah.
ESG is an additional risk management. Is that because, for example, you reduce the risk of an oil spill by not taking in oil companies? Is that, for example, the reason why? Or how
Yes.
is an additional risk management? Because you just make sure that environmental risks, for example, are as much as possible excluded by companies. Obviously, a wind company or a solar company won't have an oil spill.
The companies and countries act in a future-oriented and responsible manner. So, for example, coal production is excluded in sustainable portfolios. Or to give you an example,
which is obviously causing a lot of carbon or greenhouse gas emissions, the coal, the burning of coal. Mm-hmm.
Yes, or to give you an example for the social issue, we exclude, of course, the violation of human rights or use of child labor, or on the governance sector, balance sheet frauds, as we've seen last week, are not invested in our portfolios.
Okay, thank you. And if I may also now, obviously, I'd also ask Elisabeth how you see these developments. Obviously, your company works completely and totally with the area of ESG, the sustainability area. Is anything that you can see also in terms of the healthcare aspect? Have you seen a particular increase of demand in that area?
So first, maybe generally on the sustainability aspect, because we have been talking on the performance of funds, and we have done in the peak of the Corona crisis an analysis and a study of funds in Austria, and we have seen that sustainable funds, as Christiane said, are more resilient during crisis and actually perform better than conventional funds because of the historic low prices of oil, obviously. But this is not surprising to us because there are many more studies done before Corona that sustainable funds are actually performing better than conventional funds. And for us, it's still very interesting to see, and you can track that on cleanvest.org, that 90% of all funds in Austria are still invested in coal power plants, coal mining, gas, and oil. And that's just interesting aspect if you consider the sustainability aspect and the performance aspect together. Now, healthcare has been, or the social dimension has been now, for the first time, I would say, since the climate movements of center stage when it comes to ESG criteria, which I really applaud. And we have seen on the click rates on our web platform that more and more private investors are looking for social, the S in ESG dimension in their funds, and they would like to promote healthcare infrastructure, and this has been a very nice development to track. And yeah, so I would say when you go on SHEinvest and you want really a fund that has all the 9 sustainability criteria, it's still not possible to get one in Austria, but we really hope that with the high demand now also from the millennial generation, but also, I mean, our generation, that we can have a shift towards more sustainable thinking in asset management.
Okay. So I'm not sure. I think we are coming time-wise towards the end, and I hope there was something interesting for everyone in our audience to take home with from this roundtable.